Appreciate everyone joining us today. Prashant Kher, Managing Director at EY-Parthenon. I lead a lot of our digital asset strategy work with a lot of big traditional financial firms, corporates, and crypto natives as they build out their digital asset strategies. So very excited to be joined here. What we're actually going to do at the beginning, what we're hoping to cover in this panel is, look, we just walked through the next generation of stablecoin issuers and talked through a bunch of issuers. We're now very excited to hear on where do we see the demand coming from? Where do we see the use cases? How are corporates gearing up for adoption? What are the benefits corporates look to realize when using stablecoins? And where do they look to get stablecoin services? So what we're actually going to do, and today at EY, we ran a survey the second half of June, where we surveyed 250 corporates and 100 FIs on stablecoin usage, use case interest, drivers behind stablecoin usage, how they plan to implement stablecoins, and so we're actually launching that report here. We'll cover a few of the stats up front, and then we'll talk through some of the results. So just to get us very quickly started, we surveyed, as I mentioned, 250 corporates and 100 financial institutions. This survey was run after Genius passed the Senate towards mid-June, and obviously before it passed the House and was signed into law by President Trump. So when we ran the survey, 13% of respondents, of the 350 respondents, had noted that they had used stablecoins. And actually, when you drill down to corporates versus FIs, it was 8% of corporates, and so these are oil and gas, healthcare, tech media, professional services type firms, and 23% of the financial institutions had noted they had used. And out of the organizations that had not used stablecoins, roughly about half had noted there was a big interest to explore using them over the next year. So with that as backdrop, why don't we go through, introduce the panelists. Leo, if you want to give a quick background about who you are, and we'll jump in.
Sure. Nice to meet you all. I'm Leo Mizuhara. I guess we're part of the old version of stablecoins at Circle. My background is in traditional finance. I was in trading for 17 years before I started Hashnote, which was a tokenized money market fund company that got acquired by Circle this last year. I'm head of, or VP of growth at Circle, and yeah, we're seeing a lot of great adoption right now, so we're very excited to be here.
I'm Sarah Grooms, and I work for a company called Wintrust Financial Corporation. I think I might be the most traditional, the two of us might be, of this whole conference. I run banking strategy there, and have been there for 24 years, actually, and it's a really interesting time from where personal and professional are intersecting, finally.
And I'm Keerthi Moudgal. I lead product for JP Morgan's digital asset platform called Kinexys Digital Assets. Kinexys itself is the name of our blockchain-focused business unit, and I've been with the team for the last 7 years, so excited to be back in this room and sharing sort of the next wave of adoption with you all.
Excellent. So to get us started, we'll start off with a lightning round question. So let's go through, and maybe Keerthi, we'll start with you. So from your perspective, why should corporates start caring about stablecoins, tokenized deposits, and tokenization?
Yeah, I think at a high level, the reason why this construct of tokenization, both in terms of money as well as in terms of assets, has really resonated with us as an institution as well as with our client base is that really what it does is give our clients greater direction and control over their assets, money, and information. Instead of having to worry about traditional wire cutoff times, or if our clients want to align how, again, their money, their assets, their information move a little bit more closely to their actual business workflows, we definitely see tokenization and this sort of suite of solutions around on-chain exposure to cash is giving them the means to do so.
Excellent. And Sarah, how about you?
So it's much different scale.
Yeah.
It was interesting, some of the details in the survey you're going to release speak specifically to the size of companies and who who's using this and who's adopting it, who's looking at it, and everything else. And I think that's one of the stark differences. And it's really important the way you call out the difference too between tokenization and actual use of an official stablecoin, right? Whether it's a bank issuing it or one of the parties that we'll be able to tap into. For the most part, our clients, which are under the $1 billion mark to the main majority, are really not there yet. And so for us, the conversations are much more around: is this just a new rail? What is it going to replace or offset? And how is that going to both impact the bank from an efficiency perspective, as well as payments perspective, revenue perspective, and everything else. And so the way that we're looking at it in particular right now has a lot to do with what are we already good at? What do our clients already appreciate? What are their needs and interests? And then how does either digital ledger, stablecoin, tokenization, and really teasing those apart to make sure that we're going to apply the right construct for each use case, and paying attention to where quick wins are going to be and what the client-driven need is really going to be.
Excellent. Leo, how about you? What's your perspectives on why corporates, non-financial institutions should start thinking about stablecoins now and tokenized deposits?
I have a very similar response, actually. I've always been a first principles kind of guy, and when I think about stablecoins, tokenized deposits, and tokenization in general, I think there are three ways we need to think about this, right? There's the change in the banking system. Like, the way that we move money is about to change. That might not matter for a lot of people because, like, the banks are going to abstract that away for you, right? And that's generally been the case with financial institutions. Financial institutions abstract away from us the daily happenings that have to occur in the background for all these things to go on. Important for financial institutions, though, right? And financial institutions have to see that change coming and make that change with the market. I think the second piece is, what does that let you do beyond what you can currently do with money? So as Circle, like, one of the reasons why we think that the USYC USDC pairing is so effective is because we can now do things that the financial system could never do before, right? We have instant conversion between a interest-bearing token and non-interest-bearing token 24/7, 365, and that's something that just doesn't exist. So there are these leaps that happen within finance that this, like, internet money, if you will, are going to let us do. So that second prong is, like, what are the features to finance that we can add now? And then the third thing is, more generally, like, in my opinion, blockchain technology is a coordination technology more than it is a money technology. Now, for money, you have to be coordinated, and so that's why a lot of things happen where you have confirmations and all this stuff that slows down the movement of money. But because it's a coordination technology, there are tons of other things that require that coordination technology at an internet scale. The first thing that comes to my mind is, like, concert tickets. Like, anytime you have a ticket where you need uniqueness and kind of temporary existence, it's a great technology for that sort of thing. So yeah, I think there's a bunch of places where people need to be thinking about it, and it's, like, legal now, which really helps, right? Like, a year ago, we were all thinking, none of this is legal, so we don't know what we can do.
Now we have a framework in place.
Well,
exactly
I
right.
think it's important too when you talk about what should corporates be considering. The interesting thing to me a lot of times, and I think that everybody in this room, especially DeFi and wannabe degens like me, it's we care about the technology, right? And the majority doesn't. Consumers or corporates, they don't care. Is my money going to be safe, secure, move faster, move cheaper? What are my, right? And so so that's where what I'm hearing so much of right now is, like, well, this is just another rail, right? We just have to figure out how to integrate this. And so it's going to be really interesting. And there was some talk a couple of sessions ago about the need to still continue educating. Yeah. And it's shocking that even when you get into a room full of the people that are, like, in my role at other large financial institutions, they're like, I don't understand why I would have to use anything with tokenization. Why wouldn't I just? And I'm like, oh wow, we need a backup even for the people who now we need to go back to the banks and educate so that we can educate the customer. And so there's still a lot of work to do around that as well.
All great points, and we'll definitely dive into that and unpack some of those comments in a minute. So, just to pivot to one more slide, just out of the 13% of the respondents that had used stablecoins, want to quickly highlight some of the benefits that some of these corporates are starting to realize. So 41% of the corporates that have used stablecoins noted that they realized around 10% cost savings, and some of that be, to your points around, is newer rails, faster, cheaper rails, better efficiencies. And when looking at the top use cases, paying suppliers cross-border, accepting business payments cross-border, and cash management cross-border. So 3 cross-border use cases were the top use cases for those that are using. And as we look to those, I'll quickly talk to it on the left. As we look to those of the corporates that are exploring stablecoins and where they're of interest, but the top 3 were also cross-border, and the top drivers of interest were reduced transaction costs and faster cross-border payments. So maybe to unpack that a little bit, both around where users have used stablecoins today, where they found benefits, and what's driving usage going forward. Keerthi, maybe over to you on when you're speaking to your corporate clients about stablecoins and tokenized deposits, What are the drivers you're hearing from them? What are the drivers you're telling them about? What are the use cases that you're seeing they're interested in?
Yeah, so when we think about sort of our approach to this, again, this world of like on-chain cash and tokenized assets, and the fact that we've been at it really for the last 5 years, like that client interest has really always centered around 24/7 money movement and programmability. Those are like the two key constructs that we hear over and over again from our clients in terms of why they would choose to use a JP Morgan on-chain cash product to begin with, and then how they then apply that forward when it comes to thinking about, their financial transactions beyond just payments. So thinking about like trade settlements, thinking about collateral mobility, so on and so forth. When we think about, what we've done with tokenized deposits, and as we look to the future, scaling beyond, the permission settings that we've operated on and actually onto public ecosystems, really what we wanted to do for our clients is offer them those same like two core constructs of 24/7 money movement programmability, coupled with the safety and security of the backing of JP Morgan, with the various different types of activities they might want to perform on public chain ecosystems. If we have very forward-thinking, broker-dealers, again, hypothetical example, that are looking to get a little bit closer to DeFi ecosystems, how would we think about supplying them with a payments layer that they're, familiar with and comfortable with and have like assessed from a risk perspective, but is also just as flexible as what you see and experience with stablecoins. And so I think definitely when it comes to tokenized deposits specifically, as well as tokenized assets on public chain ecosystems, we are slowly starting to see that demand crop up from our client bases. But to Sarah's point, like a lot of the conversation is really more around, based off of like the activity that I'm doing today, how does this thing make my activity easier to do? As opposed to sort of like, coming from the perspective of there's all this stuff happening in a public blockchain, how can I use a tokenized deposit? That's definitely less so of the conversation, and it's more around how do I make my existing business processes more efficient?
That's a great point. There's a big difference between investors and traders who want to trade new assets, get new types of exposure, chase new types of returns, versus corporates that are looking at payments, and they're looking at how can you make my life as a treasurer, as a head of finance, easier, faster, cheaper, programmable.
Exactly. And also, coming from the perspective of being both the I guess, issuer of a tokenized deposit, as well as, the institution that's like trading with our clients and providing liquidity to them. I think the other interesting avenue that we definitely want to explore is thinking about, how the sort of like proliferation of on-chain products and our ability to either like finance them or help our clients in other ways can be made more efficient there as well.
Appreciate your comments. Sarah, in the beginning of your introduction, you talked about how, you made a good point about how your customer base is different from a typical persona, a corporate persona from a JP Morgan. The more mid-market, regional corporate clients, what are you talking to them about stablecoins? Are they even coming to you to talk about stablecoins and blockchain-based payments? How are you talking about the benefits? Do you see some of them starting to adapt? I would love to unpack that a bit.
Absolutely. Sorry, multi-threading here. There's so many answers. I was just talking to a bunch of our group heads, which are people that are over the teams of commercial bankers, specifically in Chicago and Milwaukee, and a lot of it is still again around the education. And so it's very much related to. It's either, it's funny, our head of middle market banking entirely was telling me that this weekend he and a bunch of his buddies that are all former, Chase guys are just like, I don't get it, like Bitcoin and, blockchain's probably a game changer, but I don't trust Bitcoin. And I'm like, again, you just stop listening to Jamie for a minute, right? And just like we got to unpack this and tease this apart. And so I think that the main drivers, if somebody is interested, usually it's, oh, well, yeah, I do crypto. And it's like, we're not talking about crypto, right? Like, let's actually talk about, and I think, one of the things that we didn't really get into a little bit in the last answer was around programmability, because that to me is going to be a huge game changer. When you look at, a lot of people, cross-border payments for sure, but if we put that under, if we put that as the banner and say, okay, well, what does that all mean? And you get into, especially around FX and what so many people think of in terms of like, okay, how am I going to time this payment? How do I need to worry about exchange rates? I need to worry about if then, right? And so if then is the whole point of programmability. And so exactly. And so if you get into if we start talking to them about, hey, long term, this is what this is going to look like. And so are we asking them, hey, can you adopt this tomorrow? No. What we're saying is when this becomes available, here are some ways that it's going to impact your business. To exact, what you just used as the bridge to this question. I'm a certified treasury professional. I think a lot of people who come out of fintech and treasury management and traditional banking are, and that's exactly what we would go in and talk to our corporate clients about. Hey, I know what you have to deal with every day.
I know the pain points.
I know your pain points. Here's how the bank can help. Here's how we can make it better, faster, cheaper, right? And so as we talk to them then about like, hey, all of the either documentary collection or the letters of credit and all those kinds of things, what if you don't have to deal with that anymore, right? What if is always my favorite question to ask when in sales, right? It's just like, well, I'm not saying I can do it today, but what if we could do this, right? And I think that that's really wise the way that you guys are approaching your clients and other, some of our partners who we're design partners with right now around, like our core provider and things like that, where they're saying, well, what if we could do this? Would that be of interest to you? Would that be of interest to your clients? And I think that's the only way to really approach it right now, because they're not proactively coming to us and saying, how can I do this better? Because crypto, right? Like, it's like my friend Nick Black says, no one's life is better because crypto, right? Like some of ours are, but that's more personal stuff, right? He always says nobody's pizza tastes better because you paid with crypto, right? And so it's the same thing. Nobody's caring yet about the fact that like, well, why would I use a stable coin when I can use a wire and it gets there and I have my Fed confirmation or my SWIFT number and everything moves and it's fine, right? And so again, going back to that education, I know I'm going to be a broken record on that, but especially in the smaller space where you've got, so you've got a CFO of a $300 million plumbing company that does outfits all of the, urinals around the world. Like, why do I need to worry about stablecoin versus a wire, right? It's like, no, okay, that's our job to help them understand. Here's why. Here's all of the benefits of a wire and an ACH and a check and anything. What if you have all of the benefits of that, and it's faster, and it's immutable and final, and none of the detractors? So what if that? Now you might be piquing their interest. Now we might be able to get somewhere with making those kind of claims and statements.
Great points, all great points. Leo, when you're out in the market, do you see many corporates coming directly to you, or are you more so looking and coming, having the banks come to you saying we're trying to solve a problem for corporate clients? How do you see that dynamic and the role of Circle in helping solve the problems for corporates?
Yeah, we're seeing a lot of both, actually. I think after the Genius Act passed, we've seen the most ridiculous inflow of corporates looking to do things, right? Like if you're going to do something that is regulated stablecoin in the US with somebody who's done this before, we're kind of the only game in town. And I think a lot of them are thinking about this correctly, right? They kind of get that there's something to be done with cross-border payments. There's something to be done with treasury management. They know there are cost savings. They're not sure where. They know that 24/7 settlement helps, but they're not sure like how much money that's worth. It's very clear from a trading firm perspective, right? I came from a trading background, so when my collateral gets locked up for 3 days before it arrives at the next exchange, I'm like, I know exactly how much that's costing me, and like that carry is
how much
bad.
more efficient trading can be.
Exactly, and that's why crypto first got taken up for trading use cases, right? The real product market fit is trading, then finance. And I think cross-border payments are a really obvious one from a first principles perspective, again, because there's so much like handoff from bank to bank that happens, which is where this, like, again, going back to the technology, it's that coordination issue, right? We're solving a coordination issue. So yeah, we're seeing demand across the board, and it makes sense, right? People have always left balances of money at fintech firms or in your Starbucks app comes to mind, as that used to be like the 12th biggest bank in the US apparently or something.
It's a bank that sells coffee.
Exactly. And you see that with like things like airline miles or kind of like financial instruments that are left in a digital with some sort of digital account.
Pointer, yeah.
PayPal, right? There's a lot of places where I think people are starting to look at this and say, there is something we can do with Circle and something that they can provide us that'll allow us to take all these benefits without having to go through all the work of building it. And that's part of the magic of being like a service provider or a technology firm, right? You can help your client get to that end result without them having to build everything, because we've already built it. We've got the regulatory infrastructure. We can put something in place that follows all the rules you need without you having to jump through all those hoops yourself. I think banks are typically very comfortable with like doing all the regulatory things themselves, so they come to us less than the corporates.
Well, it's not even it's not even that we're as comfortable with it. It's that when you try to outsource it, it's even harder.
Yeah.
And so we're trying not to make things even harder on ourselves. Like I would love to be able to be like, oh yeah, they do that. They do KYC, they do ML, check box. It's like, no, that makes it even harder. Your auditors, your everybody, right? I mean, am I wrong? It's like, no, now you have to be, it's
Oversight
like,
on their
well, it's
process.
third and fourth party risk.
Yeah.
Bingo. And so now I'm creating even more work for myself, and I'd rather not, but that's just the way that they've got us structured.
Yeah, and I think it's like the role that you play as a bank
Exactly.
is to take on that responsibility when it comes to like the infrastructure, the regulatory piece.
Yeah.
And again, going back to something you said earlier, like making it as seamless and easy as possible for our clients to be able to pay or to be able to interact with their cash and assets. And so maybe eventually the conversation is not like, hey, like, this is why you should use this stablecoin, or this is why you should use this deposit token to do X. It's just like, here's an interface that allows you to do X like this much smoother.
Wires,
Exactly.
stablecoin payments, et cetera.
I think that's part of why like adoption has been so hard as well, because like a lot of people start at the retail level, try to understand
Yes.
something and move to corporate, whereas
Yeah.
like nobody actually understands how Zelle and Venmo work.
Yeah.
Right? Like those of us who've like dug into it get it.
Yeah.
But like
Yeah.
if you replace the back end of Zelle tomorrow with like crypto rails,
yeah.
nobody would care.
No,
Yeah.
they don't care.
And, But
Exactly.
like that's what you want.
Yeah,
So
100%.
I think that's why like when we see things up here, right? Transaction costs, cross-border payments, 24/7 settlement, like retail does not care about these things because as far as they're concerned, they think they have instant 24/7
100%.
settlement. They have no idea what's going on
Have
They
that
have
go
no
back
clue.
in.
Yep.
It's the corporates where that gets really interesting, where that can save money and save time. And
Well, and to Leo's point, they latch on quicker to being able to quantify it, right? And so that's another thing when you kind of force someone to do the math and be like, oh, that is like we talk about this all the time, especially in FX, where it's like, oh, well, I don't have. You have no idea how many companies are like, I don't have foreign currency exposure. We pay in dollars. And we charge them dollars, so I don't have foreign currency exposure. It's like, oh wow, okay. Again, we gotta talk through this, right? Like everyone's building it in somewhere.
Yeah.
And so the more that you understand it, the more you can control that and hopefully take advantage of it.
That's another dimension I think that is difficult about retail. Retail tends to be in one country. And in particular, we're all in the US. Whereas if you're used to being in other countries and dealing with the
Exactly.
difficulties of dealing with cross-border,
Yeah.
it makes so much more sense than if you're like America-centric and
Yeah.
not having to deal with any of those intricacies of like cross-border payments.
Well,
Again,
we're
that's
so
my favorite.
ethnocentric in general as a people here, and that's why when you do look at crypto and blockchain as a whole, you don't understand it until you put yourself in the shoes of someone that is not part of this financial system. Because, as hard and as, crazy as we know it is on the inside of this, it's still the best in the world. For the most part, which is scary, right? But it's true. And so like the people, in our boardrooms and everywhere else, and not to denigrate anybody in leadership in the financial industry in the States, but they're like, why do I need this? Like the financial system works fine. I have an instant settlement. I have this, I have that. And it's like until you understand the way that the rest of the world is. Because to your point, cross-border is typically more corporate, but we see more and more on the consumer side, people, who are not, native U.S. citizens, that, well, not only that, but then you're having to send payment home,
Yeah,
right?
yeah.
And people at home, wherever home is, they want to hold dollars. And to me, from a retail perspective, that's a huge use case for stablecoin. But, again, here, the majority, they don't think about that. And so it's a huge part again of I think of the ethos of crypto in general, and the democratization of everything, and the understanding that like this is for everyone.
Yeah, it's surprising sometimes. Like, you're at a global bank. We've talked to not your global bank, but yours too. But I was telling a story about a different global bank. It's surprising when you move money even within the same bank from one country to another.
Yeah.
They wire themselves.
It's not the same.
Yeah.
It's not the same bank.
You're like, exactly. It's not the same
not the
bank.
same bank.
Yeah, it's
We
different
see-
regulators,
Yeah.
it's
See
different
that-
firms.
We see that all the time. We've had several banks in the Chicagoland market purchased by banks in Canada, and everyone thinks, oh, good, now I'm part of a Canadian bank and I have Canadian operations, and I can. It's like
Yeah.
it's
They're
two different
hardly
banks.
related, yeah.
Yeah, it's even more complicated when you have one
It
entity
is.
funding another entity versus.
Well, then you get different regulatory regimes.
Yeah.
Yeah.
Yeah. Exactly.
so jump to the last point. We talk about, in perfect setup, barriers to adoption, right? So one of the facts or one of the stats we found from corporates was around 70% of corporates would be more willing to use stablecoins if it was integrated into their ERP. And roughly about 2/3 of corporates would prefer to get stablecoin capabilities from their banking partner, their payments partner, the PSP, which interestingly, when surveying the banks and the PSPs and the fintechs, 95% said they were going to look at partnerships with stablecoin issuers, stablecoin platforms to enable those capabilities. So as we jump into the last question, maybe Leo would start with you. How are you balancing, you mentioned some interesting points, corporates are coming directly to you, banks are also coming to you to enable capabilities for their clients. How are you balancing that? How are you seeing some of that play out?
Yeah, I mean, we want to partner with as many other firms as we can. I think that for a lot of, we're trying to provide the stablecoin. That is the technology rail for everybody else to do all the amazing things that you can now do with this new technology. Typically, we try to build things where something doesn't exist or where a network needs to be kind of credibly neutral among other parties, or there's like a feature set that you need. So, we're very much of the opinion that everyone is going to have an easier time integrating into this ecosystem if you can get it through your ERP, through your bank, through your broker, whatever it might be. There are cases, however, where we've been getting a fair bit of, a lot of opinions coming out about our new ARC blockchain, for example. But when we look at it from the inside, we say, well, we need something for payments, especially that is private, right? Privacy is super important when you're making your payments. It has to be fast, and it can't have this fluctuating price of transaction, right? Like paying in a crypto is just kind of weird.
Too volatile, yeah.
Yeah, too volatile. So we don't see any other chain out there that does all those things. Private, as private as Canton, if you guys know about Canton, as fast as Solana, and with that stablecoin as your primary gas token, that just doesn't exist. So we thought we needed to put that out in the world and make it a thing that everyone else can use. But at the same time, we do want to remain incredibly neutral, deploy USDC on every other chain, make it available through banking rails, payment rails, ERP solutions, and but we got to move the technology forward. If we can help do that, we'll also do that.
Mm-hmm.
Excellent. Sarah, on your end, what do you think will drive adoption with your, some of your corporate clients? You mentioned, right, not the similar profile of a global corporate that might be banking with a JP, some of the more regional mid-market. What do you think will drive adoption usage amongst them?
I think it'll definitely come down to how we decide to position it, but that's going to be based on what they're asking for. And so if it is, hey, why does this take 2 days to settle? Hey, why can't I get a faster confirmation? Why is this so expensive? I'll tell you, one of the things that really drives corporates nuts is when they send a wire and it ends up, being $80 short or whatever, right? And people still don't understand that, even in middle market companies. They're like, I don't get it. Like, where is all of this money going?
Yeah.
So that transparency, that finality, and then getting the actual amount due to the end place when it was supposed to be there. I think if we can say, well, what if I can solve that for you? That's going to drive adoption in a huge manner.
And Keerthi, how about you with some of your global corporates? What do you think is the biggest hurdle to adoption today?
Yeah, for sure. I mean, I think I definitely agree with the 63% of corporates that are looking to leverage some of these capabilities from their banking partner. I think that's the foundational thesis of why we've built what we've built when it comes to tokenized deposits, but also tokenized assets and the like. I think, we, from our conversations and from what we see in the space, our clients are looking for the entities that they trust to help them navigate, the process to more efficient, better, faster, cheaper payments and asset movement. I think the other big piece that we didn't touch on is the fact that I think in this period of adoption, this sort of duality, we'll see how long that lasts. I think that'll be a while, but between the on-chain systems and the off-chain systems, having a partner where your liquidity is not further fragmented, we think will be really important. So making sure it's as seamless as possible for our clients to move between those ecosystems, I think is going to be a big piece of that as well.
And I think that's the key thing that you said in the first part of that is the trust. Because people don't always understand. They know it might be better and faster, but it's okay, but does my bank offer it?
Yeah.
And we still see that,
And if it's enabled in my ERP, enabled in my existing payment solutions, it's just much easier to adopt. Yeah,
exactly.
So look, I know we've got about 20 seconds left holding everybody from lunch. So Keerthi, Sarah, Leo, really appreciate all of your inputs, insights. Quick QR code and the full report is available online. So We'll also circulate around with everybody, but
Look at
go ahead and
everybody
download
grabbing it
and send it around.
It's a big deal. This is the announcement, right?
This is the announcement,
Everybody,
exactly.
you're first. Congrats.
Exactly.
Yeah, congrats for sure.
Well, thank you all for the wonderful insights. Thank you all for having us, and everyone enjoy lunch.